Imagine a battlefield fraught with uncertainty and volatility. This, dear viewers, is the current state of the UK banking sector. The past few years have seen a whirlwind of change and challenge. The aftermath of Brexit has fed into this volatility, with new trade relationships and economic policies reshaping the landscape of UK banking. Then the global pandemic hit. The banking sector, like many others, felt the shockwaves. Lending rates plunged, profits dwindled, and banks found themselves in uncharted territory. But it wasn't all doom and gloom. These challenges also presented opportunities. With an increased shift towards digital banking and a rise in fintech innovations, UK banks found new avenues for growth and customer engagement. Now, the UK banking sector stands at a crossroads, balancing the scales between risk and opportunity. Amidst this landscape of change and challenge, the resilience of UK banks is being put to the test. In this stormy sea of financial turbulence, one ship sails with resilience: Lloyds Bank. Lloyds Bank, a stalwart in the British banking industry, stands tall amidst its peers. Now, let's delve into the heart of the matter. How does Lloyds Bank stack up against other major UK banks in terms of financial performance? When discussing financial performance, it's crucial to consider key financial indicators. So, let's start with net income. In the recent fiscal year, Lloyds Bank has showcased resilience, posting a healthy net income that signifies its robust profitability. This strength in earnings is an encouraging sign for potential investors, as it underscores the bank's ability to generate profit. Now, let's move on to revenue. Lloyds Bank, with its expansive network and diversified services, has managed to maintain a steady revenue stream. This consistent revenue flow is reflective of the bank's stable customer base and its ability to monetize its services effectively. But what about dividend yield? For many investors, particularly those with a long-term perspective, the dividend yield is just as important as profit. It's a measure of the income an investor can expect to receive for every pound invested in the bank's stock. In this regard, Lloyds Bank has been a generous player, offering a competitive dividend yield that outpaces several of its UK counterparts. This strong dividend yield not only provides an immediate return on investment, but also showcases the bank's confidence in its future profitability. However, the financial world is complex, and while these indicators are indeed promising, they are but a piece of the larger puzzle. Other factors such as market conditions, economic forecasts, and the bank's strategic direction also play pivotal roles in determining the attractiveness of its stock. The numbers don't lie. Lloyds Bank has shown a robust financial performance, but is it the best UK banking stock to buy right now? As we delve deeper into this question, remember, every investment decision should be made based on thorough research and careful consideration. Investing in banks can be a risky business, so is Lloyds Bank worth your hard-earned money? Let's delve deeper into the financial performance of Lloyds Bank. Lloyds has shown a strong financial performance over the past few years, boasting a robust balance sheet. The bank's consistent profitability is a testament to its operational excellence and efficient cost management. They've managed to maintain a strong capital position even amidst economic uncertainties, which is no small feat. But it's not all rosy. Despite its strengths, Lloyds Bank has its fair share of weaknesses. The bank's over-reliance on the UK economy exposes it to potential risks, such as economic downturns and Brexit uncertainties. It's also grappling with the challenge of low interest rates, which can squeeze profit margins. So, what does the future look like for Lloyds Bank? The bank's future outlook is promising, with plans to expand its digital offerings and diversify its income streams. However, factors like regulatory changes and the ongoing pandemic could pose potential risks. Yes, Lloyds Bank has shown resilience and adaptability, but it's important to remember that the banking sector is inherently volatile. Any investment carries a risk, and this is especially true for banks. Therefore, it's crucial to consider your risk tolerance and investment goals before making a decision. In terms of dividends, Lloyds Bank has a history of generating a decent yield, which can be attractive to income-focused investors. But again, it's essential to keep in mind that past performance is not always indicative of future results. To sum it up, Lloyds Bank, with its solid financial performance and promising outlook, certainly seems like an appealing choice for investors. But as with any investment, it's vital to do your due diligence and consider all potential risks. After all, it's your hard-earned money on the line. Lloyds Bank, with its solid financial performance and promising outlook, certainly seems like an appealing choice for investors. Let's take a step back and summarize what we've learned today. We've delved into the UK banking sector, a dynamic landscape with its fair share of challenges and opportunities. We've compared Lloyds Bank with its peers, and it's clear this old player still has some tricks up its sleeve. Their financial performance, marked by steady growth and a promising dividend yield, stands as a testament to their resilience. But is Lloyds Bank a good investment choice? Well, that's a question that doesn't have a one-size-fits-all answer. It depends on your financial goals, risk tolerance, and investment horizon. What we can say, however, is that it's certainly an option worth considering, given its strong footing in the banking sector and its potential for future growth. Remember, investing is all about making informed decisions. Do your research and don't forget to subscribe and comment below with your thoughts on Lloyds Bank.